Hi, everyone. Welcome back to another short episode of the Normalized Money Show. My name is Kirsten, and today we are talking about how do I save money on my car payments. I have co host Julie on. Julie, how are you?
Good. Thanks.
Good, good. So, last week we talked about what's a good credit score, some secrets to improve your credit score. And today, let's talk about this 3-digit number that we looked at. Could be, in the 500s, it could be in the 800s. But as it really matters to how much you save every month on a car payment. So for me, I like to buy my cars with 0% interest. I do like to finance vehicles and pretty much everything in my life because it is difficult for most people, and also even for me to save up $100,000 for anything like a down payment on a house or 20,000 on a car. I would rather go to I like Enterprise Rent a Car, but they have actually fleet vehicles where you can buy their cars used after about a year and they're all super shiny and well taken care of. And so what I want to get into is that I normally wait until there's a 0% interest rate sale or with a great credit score, because I keep my score around 760 normally. I can get maybe a 3% loan. What do you like to do when you buy a car, Julie?
I prefer to go to a credit union. A credit union is going to be a little bit more lenient when it comes to the terms. And I think that, building a relationship with, like, I don't want to say necessarily local, but, with a credit union, knowing that, I am a good payer and that I do, prefer to finance my cars. I don't keep a long car loan, but I do feel like, it's a better decision for me to get that lower credit opportunity from a credit union.
Okay. Now, as it relates to people in recovery or shared housing or even teenagers, the reason that this particular class that we're doing right now is so important is because this is one of the first things that most people need to get a job that they like and that pays well. And so what we see at Katie's House Foundation is that uh, people don't know how to apply for a car loan, and they think they have to save up 15, 20, $25,000 to buy a vehicle, or that they have to save up, let's say, $2,000 and go buy a vehicle that doesn't work very well. And then it's constantly having problems and they're getting laid off from work because they're never on time and they're having to save up $500 to put in a new transmission. And I will just tell you, all of that is nonsense. You don't need to do that. So if you are a teenager or somebody without a vehicle, and you have a driver's license, this is the class for you. You can absolutely, with a 500, 600, 700 credit score, any one of those, most dealerships will give you an auto loan if you have a job. So even if that's the local McDonald's that you've been walking to from your roommate housing or your parents' house or wherever it is that you're living, keep that McDonald's job or Walmart or whatever it is. So that way you can give them your pay stubs and show them, I have a job, I make a couple $100 a week, and I can afford $200 or $300 for a car. Because once you get this car, you now can go get yourself a job in the city or somewhere else, right? Making $1,000 a week. Julie, what do you think about that?
Well, so on my side, we talked about the credit union. If I'm working and I'm putting my money in the credit union and they see that I have this income and they see that I have money in my account and I go to ask for a loan, they can automatically take it out of my paycheck and I pay my car loan automatically. And I think it's less of a risk for them. And I think that the one thing that I want to say on this class today is that I saw a lot of times with my tenants that this was a very much needed thing, that they couldn't walk to the jobs, they needed the car, and that they would just become so desperate that they would go to a local car dealer that was a buy here, pay here, and they would pay like 20% interest for their car. And so their car would be what we call upside down the minute they drove it out of the lot, is that they were paying so much more. And I see on the screen here that you have an in total loan interest on there is 1700. And if you upped that, I don't know what you have 5% interest rate. If you up that to 15% and saw what the car payment went to, that yeah, all they were buying was a car that they were going to have nothing but mechanical problems with later. And their payments were so astronomical that when the car stopped working, they couldn't afford it anymore, you know? And I
So
just
let's
want
talk let's talk about that interest rate that you're touching on right now. So, having a good credit score and paying your bills on time is so important to keep your payment as low as possible on your car and every other type of loan that you want to have. You want to have loans, guys, because it gives you the good credit score that you're looking for. So that way, when you need to rent a house, in let's say that you need to get a car when you're 16 or 18 or 20 or whatever age you are at, and you've never had a car loan before, go and get a car loan. And just see what they're willing to give you on the rate, and then make sure you pay that on time forever. And so let's take a look at this calculator. I have $10,000 in here. That would be the price of the car, which, oh, by the way, you're probably not going to find a car for 10 grand. Maybe you will, and hopefully, take it to a mechanic, have them check it out, pay the $200 to make sure that it's not going to have mechanical issues. And Julie, I'm with you on the credit union. Credit unions do have good rates. And so if you don't have a bank account, open one up with a credit union, put your paychecks in there. That way they can see. And so I like a 72-month term, or the longest that I can go, because I always want my payments to be as low as they can be so I can leverage cash flow. But so 72 months, 5% interest rate. We're going to say that it's just, zero down payment. There's no incentives. I'm not trading in a vehicle. And whatever state you're in, this is for tax purposes. So we'll leave this on Illinois. And then this is the tax that popped in there is 7%. And then you normally have these other fees, which they can put into your loan. And so when we calculate this out, your payment is $212 respectively. Julie, you had said if we put in 15% interest rate here. Now, the reason that you might get a 15% interest rate is because you opened up a credit card when you were such and such age and you never paid on it. You just never made the payments and it went to collection. And so the only credit that maybe you have is bad credit, which is worse than having no credit. If you have bad credit, that's okay. You have to start somewhere in basically developing a new history. So take whatever rate that they will give you, so that way you can just basically get yourself on a new track record of paying on time. And that old stuff, you guys, just so you know, it'll fall off your credit after 7 years.
Yeah, and that's something that, I was talking about how my tenants would go from, me getting an interest rate of 5% to them getting 15%. So hit that button. You're going from a $212 payment to a $279 payment. So you're looking at the difference there of paying that, or you got that credit card, you charged it up to the most, you have no credit limit left on that card, they see that you have that payment each month. Now you're looking at your debt to income ratio, and the more, like you're a materialistic person, you're getting more and more things, but you're not having that job to pay for it, and you're not balancing those things in life, that in a sense is costing you all that extra money, which is about $65-70 right there a month.
Yes. So that
So
is why your credit score matters, guys, is because that will dictate what interest rate you get. And so let me show you this over here. This is Enterprise. You can go and buy a car from them. like I was saying. But what I wanted to show you here is that they look at what your credit score is. And so you've got stellar, you've got awesome, good, okay, and not perfect. Also, if you go over here to some of these other websites, they're going to be going by the same thing: excellent credit, good credit, fair, needs work. And that's going to dictate what kind of interest rate you get and also how long. And so this one here is saying 84 months. Minimum credit score is 600, and this is the starting rate is 5.74. Now, I'll tell you, with a 600 credit score, you're not going to get 5.74. There's rate sheets. You guys can actually just search rate sheets. It'll come up with a whole bunch of credit scores and then what the rate is. Most banks, they actually put their rate sheets online. And so you can look at that kind of stuff. You don't really need to, but let's just say that you are at 15%. That's okay. Get the car loan, please, because you have to start building your credit. And once you pay for 6 months or 12 months, you can refinance into a new loan. So,
Right. So pick that better car at an interest rate that you can just afford now to able to stepstone up. And that's where, like, if you were looking at this $10,000 car right now at 15%, what if I bought a $15,000 car? How much is my payment then? Is it going to go up that much?
$100.
So that's where, you gotta kind of balance, right? You gotta kind of say, hey, what can I afford now that I know I can pay? Because the last thing I want to do is to get into something I can't afford when something breaks. And then I'm right back to square one. And that's where I think, like I said, going to that credit union, going to somewhere where you're putting your money into it so that they can see that you're, and sticking with that car loan with, with the intent of keeping that car to get to work and back, and concentrating on that, and then concentrating on something else later. And it's stepping stones.
Yeah, nothing is permanent, you guys. You have to be able to see today and then also see 12 months out. And so I just put 84 months on the loan term here. And, that's probably the longest that anyone's going to give you. And if you can go longer to drive this payment down, so that brought the payment down a little bit. That's okay to do that, because again, in 6 months or 12 months after you have been able to have a nice, reliable car, that has gotten you to a different job, then you can go to any bank or credit union and you can say, I would like to refinance my loan into a 60-month term, which is 5 years, which that's pretty typical. And they will go ahead and pull your credit at that point, and they will see that you've been paying for 12 months on time. They will probably offer you, that 60-month loan, and maybe they give you a 10% interest rate at that time, and you wouldn't have the fees anymore because you don't have to do the title and registration. So actually now you're saving some money. So these step stones, that's what we're talking about, right? Is that every 12 months, I would say 12 months is good stepping stones to always be driving towards.
Yeah. And, just try to make sure that you're trying to better your score and not trying to overextend yourself. And that I think is what a lot of the algorithms in the credit scores also measure, is whether or not you're not only paying on time, but if you're overextending yourself and you're not able to manage your money. And that's the part where we're not taught that in high school. And I think, we're not exactly teaching people how to, eat beans and rice and to be completely frugal. But at the same time, I think you should balance how you use the banking tools and what you're using the tools to get you, those comfort things that you need. And this is not just a comfort thing. This is a necessity. And it may not be, Mercedes, but you may have to buy the Volkswagen to start with, but that's fine, and go from there.
Absolutely. Really quick, I want to touch on not cash incentives necessarily, but down payments. You guys, let's look at this really quick. This is $15,000 at 84 months at 15%, which is normally what they cap car loans at, is right around 15 these days. But again, if they give you something higher, you might just have to go with it if they're the only place that'll give you a reliable vehicle for a payment that you can afford, for at least 12 months to get yourself where you need to go. I just want to show you, if you have $1,000 to your name, do not give it to them as a down payment, because let's look at what this does. So it's going to take your loan from 15,000 down to, well, with the fees and everything, you got $2,500 in fees. But basically, if you give them your $1,000 that you have in your pocket, it brought your car payment down, maybe around $15 a month, but you just gave them all the cash that you had for your rent payment or to eat. And so this is really important that you guys go to calculators.net, calculator, there's no S.net, and make sure that you're running these numbers yourself before you hand someone over all of your savings. It might not be the best use. You might be better off just keeping your $1,000 so that way you can pay your rent and, of course, have food. And then it's only $15 a month more on your monthly payments. But anyhow, that's my 2 cents on that. Julie, any thoughts on down payments?
Well, I mean, that would come back to managing your money, right? And knowing what you've got that you've got to pay for, how you're keeping your payments, and what you have for emergencies. And, I think at some point we're going to talk about credit cards and credit lines, and we'll talk about, how to maybe balance some of that down the road. But yeah, I mean, I know we got to cut it off here. And I think that we just need to make sure that we're giving them the advice of, loans are not a bad thing. And the banks have tools that we can use that we, at the time, maybe we don't need to give a down payment. That's not what they're requiring. If it's something they're requiring, then that's something we have to visit. But yeah, definitely know what your options are and know what you're required to do or what you're not required to do, and don't be bullied into anything.
Yeah.
So,
And that was actually $20 a month. Hey, real quick, that was $20 a month difference. I just want to be clear with all these numbers going on.
well, I think, we're at the mark where we want to, extend our invitation for any questions down below. Like and subscribe. Keep coming back each week. Get each lesson, grow from it, and have a good week.
All right. Have a good week. Bye-bye.